All right, so we're gonna go ahead and get started with this lesson on imbalances in the market. And I'm gonna go ahead and use a drawing tool just for a little bit. So essentially, and let me go ahead and zoom in on the chart real quick. So yeah, show you guys real quick. So basically what an imbalance is, so every candle that you guys see in the market, there's always going to be wicks in between them. And usually, so for instance, you have this candle right here. There's a wick on both sides covering this whole body of the candle. Same thing here. And same thing here, just a little bit, you have a small imbalance right here. But essentially that is what you see with all of these candles. They're always covered by wicks. So that means there's always going to be fair price in the market. Now, when there's not, we have what is called an imbalance. And this right here is an imbalance because price moved too fast in this area for there to be a fair amount of orders, meaning there's no wicks on either side, right? So there's inefficiency in the market. That's essentially what an imbalance is. It's showing you there's an inefficiency. There's an area that needs to be mitigated. And now there's a few ways that you guys can use these in your trading. First, I'll show you guys how I use them, and I'll show you how you guys can possibly use them in the future. Now, so as I first said, an imbalance is when the market moves too fast, right? So say this, we have wicks on both sides, and right, this is our imbalance. Or say we don't have a wick right here, and we don't have a wick, filling this whole body. And this is just a candle. First, say this is our example here, and I will just do this for a minute. I'll use blue. All right, that's our candle. Another candle right here. Boom. And let's go with wicks. Wicks, right? So we have a wick right here, but there's no wick. And oh, here, let me do this before. Right, there's another candle right here. And there's maybe a small wick. Just do that. And then another one. Okay. But so in this little 4 candle pattern, you see I have wicks. We're tracing into the body of most of them, right? But price moves too fast in this area, leaving, there's no wick in this body on this side and on that side, so leaving an inefficiency in the market. Now, more than likely, make sure you guys test this always on your own. I'm going to tell you that. Test out the strategies, back test it, and see how imbalances work for you. More than likely, also this has to depend on trend, and I'll get to that in a minute. But say we are in this uptrend, right? We're making higher highs at the moment, and then we have a big push, creating an imbalance. Now, from here, price can do a few things, and this all depends on higher time frame structure and other zones within. But what price can do is begin to, let me get my arrow, my pattern. When price comes to these imbalances, they begin to mitigate the open of them. They can begin to mitigate the 50. And from here, you can see continuation in a bull market or an uptrend. Also, just understanding that having other confirmations, but you can use the same concept with the supply and demand zones as you've seen in the group with taking the fib levels of these imbalances, right? And something like this, under the right conditions and under your style of trading, this is valid. So you have, once again, these candles are filled. You have a big push. This is gonna want to be mitigated almost all the time, more likely than not. One more time, go ahead and back test this for yourself. But there are a few ways, you can enter this, if you want, depending on how your trading style is. You can look to take trades off of the open, or you can look for the 50 for a safer bet. And the 50% is usually where most of the orders lie, right? Same with the same concept with the supply and demand zones, that the 50% is kind of like the sweet spot. That's the equilibrium price that the institutions operate at, I should say, in these zones. But this is just one scenario, okay? Make sure, I'm gonna say it always, make sure you guys back test. Yeah, I have my mic on, make sure, if you guys can't hear me, go ahead and let me know. But this is just one scenario of how an imbalance can work. You can have mitigation in it and continuation up. Now, say we have the same thing, and let me I'll add a couple candles. Yeah, I'll just use that. Say, boom. Say we have a demand zone, right? Now this is another scenario. Say we have a demand zone down here, understanding, you know, price came down, right? Say price came down, whatever, created lows, right? Wyckoff created lows, came up, liquidated them. This is that one down push, down candle that took out the lows. You're starting to see price trade higher, right? And as you break structure, so in this whole schematic, just like you see in price all the time, as we begin to break our structure, right? Price moves too fast, you have a mitigation, right? But we should also need to remember that demand zones also can be mitigated and operated off of the 50%, right? Now, say in this case, I'll leave these candles just like this. These candles, you know, they kind of tapped it. They didn't really break, so I'll just say this candle really is unmitigated at the moment. But you haven't really had a strong mitigation of this demand zone, right? Because this is where the banks put in a shit ton of money to push the market down, take out early buyers. Say we're in a bull market, right? We're looking to go bullish. They take out early buyers with a huge lot size and begin to push up, and then price, you know, there's an imbalance right here, but evidently they take all of these orders. So there's going to be money in here that needs to be mitigated. So, and this is all tying into scenario 2 of what can happen with an imbalance. So we showed scenario 1. Now, what can also happen, right? So now we know that we have, you know, say we have, you know, created this Wyckoff schematic. We have an imbalance down here. We also have an imbalance down here. Now, this is a good way to be able to funnel yourself out of good and bad trades by understanding this. You know, in these zones, you don't always, you know, once again, based on your trading style, but I personally don't buy just when price enters, because price can just do this, come up a little bit and shoot right down, right? Because there can be, you know, another inefficiency somewhere down there on a lower time frame, you know, that still needs to be mitigated. And that's tying into, you know, scenario 2, what can happen with this imbalance. And that is what you know, can happen, because, you know, once again, there's other areas of imbalance that need to be filled. Or in this case, this isn't an imbalance, this is a demand zone, but there is areas of inefficiency that need to be mitigated to, you know, in this situation to, you know, come down and continue higher. So you have that, right? And then you can start to, you know, maybe see something like this, right? A confirmation. So this whole, you know, this schematic right here, I draw it a lot. And this is kind of what I see. This is what I see in price, what I like to see in price for confirmations for either buys or sells. And you can flip this and just, you know, look at it as a sell too. I'll just draw it just in case. Right, boom. Break a structure, you know, creating these. This is in selling scenario. This is you know, the resistance, stop losses, and, you know, people buy stopping, trying to get the break taken, right? Price drives down. catch into this, right? What is now created, a supply zone, enter off of that, up to 50, continue down, right? But that is what I look for, zones, and that's what you guys should, start to see your, maybe help yourself understand that, look for a confirmation, right? Look for what is price doing. Is price really showing you that it wants to start going bullish from these areas? Or is it just, coming to mitigate a little bit, or, in this case, mitigate a little bit, but shoot down because there's an area, another point of interest at a lower price, that needs to be filled before continuing up. So, understanding, looking for this in price on lower timeframes or whatever time frame you like to operate on. In this case, say we got something, price came down, boom, came down again, boom, right? Still hasn't even, it's still, bearish, still hasn't even shown that, it wants to break structure and go higher, like in this instance right here, or in this whole instance, right? You have break structure, you have you liquidate, and then you break structure higher. Same thing right here. Still haven't seen that, and then it drops, right? That's okay. That's how you funnel yourself out of a good or bad trade, using smart money concept. That's how I do, I should say. But if I don't see a confirmation in that zone, so, once again, this is our imbalance, right? Do it just like that. I didn't see this as price. I did not see price give me any proper shift at all, to want to get in for a buy, maybe just a little bit higher, maybe to target these structures or somewhere in this candle yet, because, still don't know where price is going to go. But there was none of that, as I drew, right? There was none of that in this area. So funneled it out, and then, you come down to the next zone, and then you wait for a confirmation, right? You wait for that, wait for the structural break, maybe the test, and then that's my confirmation. If I'm already looking for a buy in here, get that extra confirmation, boom. That's how you can funnel yourself out. You don't see that in a zone, move on to the next one. Because maybe, in a lot of cases, maybe price needs to go lower to take out some liquidity, right? If you want to look at these, this is liquidity units, equal lows. Price wants to come down and take that out into a point of interest before going higher. That's what it can do. And that's, how I show that. That's scenario 2. That's how these imbalances are filled. Now, scenario 3 is, say we do have price come down, right? Creating lows, mitigating them, boom, we're going higher. Let me give myself some more room. And we're going higher, right? Say there's an imbalance. Say this is price. Just a moment. Boom. Wick, wick, wick. This is going to be the imbalance. There's a wick coming out of it, let's say. Okay, excuse me. So this is going to be scenario 3. Now, what scenario 3 is on how to use your imbalance. So this is our imbalance, right? Price moves too fast, break structure, price is going to need to be mitigated or swept, as we shown in scenario 2. Scenario 3 is using it as a target. And what I mean by that is, say we have distribution on this side, right? Price does whatever, blah, blah, blah. I'm gonna connect it. This is price. Right here is your, excuse me. I always misclick, I hate that shit. This is gonna be supply zone, right? Supply zones is where we look for sales. Price comes up. I'll draw a little bit more. boom, 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 gives you a distribution or something. Now, say you're looking for a sell in this area, right? You see that confirmation, you get in off of that, that supply zone, that broke structure, right? Now, where can you be targeting? Even though the overall, if you want to be looking for buys, know that you can. This is how the market moves, and there's moves within one another, right? This is happening all the time. Scenario 3 is using the imbalance for a target, and if you can go for 10, 20, 30, 40 pips, but if you understand that there's areas of imbalance, you can also use those as targets, because you can understand that, or I've shown, and also do your own digging, that these imbalances are going to want to be filled or mitigated in some way. So say we are taking a sell from up here, right? Not only, oh shit, what the hell? It's my fault. So not only would would you want to target structures, always previous structure, but you can start to target areas of imbalance. So that is scenario 3 on how you can use these imbalances, and I'll go to show now in the live market, just some examples of that. And really quick too, I sent that screenshot out of the quick profit that I took. And the reason why I took this trade was because we've been bullish, right? Or we've been bearish for a minute. And I deleted all of my drawings. So let's go and do it real quick. So this is the demand I was marking up for a possible buy on Bitcoin, because this is this is essentially the last move down here. It's unmitigated since demand's on that broke structure, and essentially had send price higher to create more highs. This is a good sign of bullishness for myself. I'm looking at obviously the levels. This is the 38.2 to 50%, and this is a 62%. But I don't use the percentages just because they all line up. They create just a specific zone, for point of interest box, if you will. So I don't really look at the level. I just look at the price. But that's what we were looking at, right? So as we are selling down, I'm still being bullish. I'm being bullish from here, so I can be bearish from other areas, to come down. And I noticed I took the sell after price broke this, kind of mitigated these highs, because on the lower time frame, you can see this kind of equally highs. There's just a lot of liquidity sitting right here, and we still didn't break this overall structure, right? If we were to have broken, this right here, then I would have started to be bullish from this area. But we still didn't break any overall bullish, any structure to make me, switch bullish. And I noticed we took this liquidity, so I decided to sell, right? But what I was selling into, because on a higher time frame, you can see there was an imbalance. And before price came into here, right, if we want to go replay mode, and this was the sell I caught in the group that I showed my profits from. This is just a personal trade. I didn't send any markups on it, but sold from up here, right? Because knowing I still want to be bearish from down here, and there was, where was it? What time frame did I see? I believe it's this right here. Even though it's in this, still inside of this zone, this is another point of interest of demand. That is overall what I'm being looking for. So that was just my overall bias for me taking my sell. But I also denoted this on a shorter term bias, because that price is far away. I don't know if it's going to get there, in the next overnight or anything like that. So this is what I was targeting short term, this imbalance. And notice how, right? These candles have wicks within them. All have wicks. This one was a clean, right? This is where price moved too fast. Straight up imbalance. So I not mark that in between the wicks. All right, you can take your levels like that. What did price do on a, let me go back just a moment. On a lower time frame, you can see also in this area, there was a shit ton of liquidity too, right? You can call this a trend line. I see this as liquidity falling right into an imbalance. Mitigates to 38.2. Is that it? That's where we are. That's where we are right now in live price. But that was a sell, and that's, I was able to be profitable on, just a small move like that. This is an example showing you guys, how these imbalances can be filled. In this case, it looks like it's being mitigated for continuation. I would like to see, more of a shift from here. If we get a shift, breaking these highs, maybe want to test. And then maybe, if we break these, then maybe, start to be bullish. But until then, I'm looking to see lower prices just on my higher time frame bias. Looking at this, this area down here. And let's go ahead and see if we can find another scenario of some imbalances. They're all over the place. Let's go into another market. Look at GU. All right. There's an imbalance right here. CC1 that already has been mitigated in price or in the past. And ones that have been filled. Has this one been filled? No, not really. So this, this imbalance right here, on GU, if you're looking for, if you're looking to be bullish in this area, maybe this is an area that you can look to target, right? You have price come down, price move too fast, breaking structure, leaving a, imbalance, inefficiency in the market is yet to be mitigated. So, right now, if you're in, when the market opens, if you're looking to sell, maybe this could be a target. Maybe this could be a continuation. Let's go ahead and keep looking for some more. Okay, beautiful. Imbalance, right? These wicks. Mitigation. Continuation with it, and then the imbalance. Here's a scenario. Scenario 1. Imbalance. Use that. Now, this, let me go make sure I can find the damn thing. Okay. Even on this time frame, maybe if you, depending on your trading strategy, if you wanted to enter on here, you could have, but this is a great, showing of scenario 1, how, this imbalance can be just completely mitigated, right? Because, overall, this is pretty bearish, right? In the past, this is a pretty bearish market. And it came to this imbalance. There was mitigation, there was activity in, swapping to price in this area, but overall, it was just to mitigate, fill the inefficiency that there once was in the market, right? In the past, and to continue down. And I don't know, doesn't look like there was, anywhere it was really going for, just based on the daily, all really because, maybe this, this was resistance, but I see it as liquidity, and all of these lows are ran. Everybody that was once buying from here that had their stops, right? Or have their sell stops looking to catch the break and the sell down, maybe they profited, but overall there was mitigation of a lot of people that, they grabbed orders and eventually, started to trade higher. But that's what happened in that case. But that's a good showing of, those imbalances, they can they can hold, they can be mitigated. And also they can be used as targets, so, maybe, if you were selling from up here, target the imbalance down there, also taking out these lows. But it's up to you guys, to really figure out how you want to use them. Mainly within either option, scenario 1 or 2. If you want to catch trades off of the imbalance, or you want to use them, as targets. So that's really up to you. But that is basically, a really great showing of imbalances. Is there any questions you guys have? I'm pretty sure you can unmute yourselves if you guys have any questions, or if there's any pair you want to look at real quick. You can let me know. Where am I? No, nothing. All right, guys. This was recorded, so you guys can go back and take notes. I hope you guys are taking notes through it. And just another show real quick. One more time. Oh, I got 2. Gold and EU. All right. And you. Ugh. I'm fine. Okay. Real quick. We'll do that. I'll show you guys one imbalance. Boom. So if you are to be bullish in the future, right? If you're going to be bullish on gold in the future, imbalance right here. You can target these areas, 1.40500. I'm not telling you to buy right now. I'm just telling you in the future, that is a valid area that you can look at to be mitigated. Also, you can look this trend line to be mitigated too. That's my 2 cents. But to end you first. So why is it not letting me? Oh, this is from a long ass time ago. Don't mind this. Oh, that's ugly. Okay. So go over to a monthly, see what price is doing. On a monthly time frame, quick imbalance. So if you're looking to be bearish, this is a zone you can definitely look at. See another imbalance out here. Go over to the daily. Looks like we have broken structure. We have a little bit of Wyckoff going on. You have a buildup, right? You have these highs all mitigated. Break of structure down. Looks like, tested within. No, can't see it on that time frame. You see on this is the last up to down candle. This is a valid supply zone. On these higher time frames, price mitigated that, try to drive lower, break more structure, right? Break these lows, coming into this imbalance just a little bit at the moment. On the daily, I still see, there's liquidity that needs to be taken. Looks like it's being mitigated just a little bit right now. This trend line, go back to the weekly. We have a better look. Have a specific zone. I don't really see anything right now. You can really, if you want to use, I'll use this. Okay. This is the last down candle, right? That broke these prices. Maybe price comes back into here, if we're, starting to see, bearishness, I do like, this break, and I like, the shifting of these prices at the moment. So maybe, we can be bearish on NU on the 4-hour. Oh, also sprinkle in something for you guys right now. Fixed range, right? Take this overall move. If this doesn't hold, there is a lot of volume in this area overall. So this, this is a valid supply zone, but overall, there is low volume in these areas that you can't really see. Let me go volume. So within this, this last up to down candle, this is also a supply zone, right? That hasn't been fully mitigated. So there's supply zones within supply zones. Go ahead and take this one off. So this is our last one. There's also, low volume is kind of can be used in the same way as imbalances. And I'm gonna go back to Bitcoin real quick, because not only was I targeting that imbalance on the hour, but, and this is gold. This like really helped me with my trading, just in terms of, understanding where price may want to be mitigated. So this, I use the fixed range. You can use it on impulses. So I use it on this impulse, right? Just on this impulse up, there was low areas of volume, right? There's low areas of volume, and these low areas of volumes, I mean, there's not a lot of orders, and essentially, it lines up with imbalances. And when I see this is like an automatic target for myself personally. Just personally, got back tested yourself always. But when I use I use these low volume areas as targets. So if I'm going to sell, right, targeting the areas of low volume, because what low volume is also another area of inefficiency, just like an imbalance is an inefficiency in the market. It's going to need to be filled. It's not always going to get filled right away. It might not get filled for a while, but more times than not, and test it yourself, but those areas are going to be mitigated. And in this area, in this instance, areas of low volume being mitigated. And, for instance, if you want to take, right, let's go just take this up impulse, right? Impulse. What is this right here? A low area, a low volume, also lined up with an imbalance beautifully, right? So you have low volume, literally almost no type of volume in this area. You have an imbalance, price move too fast. What else do you have? Liquidity, equal lows. So if you were selling from up here and you understood these concepts, you could have targeted this area. And so this is just on the daily. Go on a 4-hour time frame. You see, maybe there wasn't really any mitigation, prices blew right through. But before, right, before in this area of imbalance and low volume, price did mitigate some orders before. Honestly, just created liquidity. So you could have been profitable right here, once again, based on your own testing and your own strategy. But overall, this zone was just meant to be ran because there was inefficiency, there was low volume. So that's what happened. And, and it ran into higher areas of volume. That's what it's doing right now. So that's kind of one of the reasons why, I am looking for buys in this area. And, you see a shift, right? I talk about all the time, have this liquidity, right? Liquidity was broken. And now you're just really looking for, one more push, higher, breaking these highs to, you know, maybe see higher prices. And in the long run, you know, maybe, you know, for an impulse, right? You know, take this all this up to down. You know, maybe this, you know, there's some, you know, lower volume right here. That's a little bit right here. So these can, you know, in the future, you know, if price stays completely bullish from this area, you know, maybe those can be targets, right? Stop below your zone, you target this or that. And that's how I use the volume and also with imbalances. So you know, there's a tiny imbalance right here. You can see it. It's still an imbalance, still valid. So this is still valid. This is also this will be part of it too, you know. So there's still imbalance in between here, right? Or if you will, right there. Because even though, you know, price is, you know, still moving through here, this candle next to it, there was no wick that was covering that body. There, and you know, right here, this wick, you know, moved up, but there was still an open area in the body. And you can see these on any time in the candles on any time frame, on the daily, on the 4 hour, 1 hour, you can see that imbalance right there. So that can also be a possible target for, you know, a potential buy in the near future. And one more time, another thing that you can see is from, you know, my reason for being bullish, this structure was broken. Delete some of this. Boom, boom. These structures were broken. This structure was like, this is mitigated, but on a lower time frame, there's definitely going to be some closes above that. I bet. No, maybe not. Some mitigation. So there's liquidity above there. So that's also something like we there's a close on lower time frame, but you know, this can be a target as well, equal highs, if you will. So all in all, formulating into a buy to take out, you know, areas of inefficiency or areas of where, you know, there's the most orders and where I think that, you know, smart money wants to target. So there's that one. Let me go to, what'd you say, gold? Gold, what do I have on gold? So real quick, this is previous. I was expecting sells, or I wasn't. I remember I caught a short buy from these areas right here. Yeah, this is the previous week, caught a short buy from here, but this is when the news dropped, right? So here's, and one thing, I don't trade the news because despite, you know, what happens, you know, news or not, you can be, you know, profitable. And, you know, the way you could have caught this from a smart money perspective, and using institutional concepts, right? So in price gold, you're showing bearishness. Prices continue to break structure, right? Structure broken. You have a small consolidation right here. The reason I bought was because I had this, you know, big push. This imbalance was filled. This wasn't respected, but it came down to test a demand zone, right? And that's, you know, that was scenario 2, right? It didn't hold, came in to tap another zone that needed to be mitigated, right? And from there, you know, I waited for more confirmation and eventually took the buy right here. Could have taken the buy off of this already. Could have been a profitable right here, but I took it right here. It's still profitable, doesn't matter. But with gold on this 4 hour time frame, this was a supply zone, right? This was a supply zone, and what do you look for on supply zones? Sells. And you know, a sell could have been totally understandable from this area because we already are bearish. We are shifting bearish, right? On a 4 hour time frame, we're starting, you know, we took these lows, we're taking lows, and you know, if you use volume, you understand that there's, you know, areas of low volume and an imbalance, right? Imbalance, there's some liquidity right here. If you understood all of that, you would have been completely fine with taking a sell. You may have not known that the news was going to completely take this shit to hell, but you profited, right? And you could have taken, within the supply zone, you could have taken it off the open, right? If you had your stops just above the highs, taken it off the open, or within the 50. And price didn't tap the 50, it tapped within side. And you don't always have to go based on these levels. Anywhere within here is valid, but the most mitigations from what I've tested occur either at the 50 or within, the 50% around that area. And you could have been profitable, right? Just off of that, understanding without even looking at the news, understanding because there's other areas. And look, on a higher time frame, you see there's absolutely no volume right here. So of course already I'm targeting that regardless. If I see that, that is a target for me. But don't take my word for it. Back test always. But for myself, that's valid. I'm taking that. And you could have taken that, for the sell, right? Taking it from that zone. Boom. Payday. Good. Your rent's good. Whatever lot size you use, your rent's good for that week, month. Extra spending money, go. You're good. You don't got to worry about it. But, imbalance, low volume. It's happening time and time again. I hope you guys are taking notes on this because this is some gold shit. Took me forever to learn and understand this shit. So I really hope you guys are soaking it in and showing how, these areas are working. And to continue with the analysis, I would still need to see a little bit more just because on a daily, I'm not even going to get into deep to gold because there's some liquidity formed right here. You have this low right here. There is some overall volume. Maybe you want to look at this last overall structure, right? This overall last structural push down as your demand zone. Just because I'm uncertain, that's what I would use right now. And once again, after we break this liquidity, there's a little imbalance right here too. So what do you think? Maybe come down, fill that, right? Show a sign that we want to be bullish. And if we get that push, you can be bullish after this structure. You can be bullish from this, right? I'm gonna delete that now because we're in here. So this could be your demand zone. You can take it over here, or you can wait for another structural break and take it off the new demand zone that is formed, right? Off of that push that broke the structure. So a couple ways you can get in, but that's just what I'm waiting for at the moment. Definitely, if we want to go ahead and look at, also what we just talked about, what this whole Zoom was about. What is there? Am I good? Okay, hope I'm good. There's an imbalance right here that is yet to be mitigated at all. So, say if price does come down here to, want to buy, that's an area that you can target. This imbalance 1840, 1824, 1825. If you want to look at be specific about the prices, but that's what I see for now. Maybe there's going to be, just there could possibly be mitigation right here as a supply zone. But even if it comes up to here, I wouldn't even be worried about taking a sell. You see it from a better time frame. This is the last up move that sent price down and broke structure, right? So this could be a valid supply zone. But because it's so close to this imbalance, I'm not even going to mark it. I'll delete this because that's from the past. I don't even care about this supply zone, even though that it could possibly be valid, because I don't want to even run the risk of potentially just being liquidated just to come in here, this imbalance and have price, maybe, if I get into early, whatever, but I'm not going to have my stop that high. it's going to be right above here. So there's no point me really looking at this zone, just because it's imbalance. And there's, because we have three possibilities, it could either come to continue, right? And in that instance, if it came in and you were selling from here, if you had your stop high, you'd a little bit, you were in drawdown before you were right, but hey, right, you profited, right? So that's it. Step one. Step two could have, mitigate. Why? Because maybe there's, an area higher that needs to be mitigated, maybe a supply zone or anything, or it could just be, once again, we don't know what price is always going to do. These zones can never, we never know they're going to hold 100%, right? That's why we confirm. That's why I wait for the structural shifts. But price could always just come up here and just straight, just boom, take off, right? So that's why we always confirm. And that was, with scenario two, price could have, came in, broke that, mitigated the zone to, come higher, maybe come higher into another zone that was up behind that made another move. And once again, scenario three, which is the possibility, if we see bullishness from here, to use the imbalance as a target, right? And that's if we get proper shifts, of course, and start to show bullishness from here if we get down here. And why does my shit never show up? There we go. AU. All right. AU will be the last pair. I already had some stuff drawn up from here. So a daily time frame, I was expecting some bearishness from here because there's some, delete this, pass, crap, doesn't really matter. This is supply zone. This is the last, up to down move that evidently broke structure to start creating a structural shift push down. It was left unmitigated, this on a higher time frame. So something like that. It still hasn't, motherfucker. It hasn't, been mitigated yet. So that's, something I'll be looking for if price was to come up here for sells. We also have this candle right here. But price kind of did what I wanted it to do, because when I was looking at this, I was expecting to be bearish already to take out these lows, because I always look at lows as, or equal lows and shit like this as liquidity. Because even though, in the past, may have been valid, I'm looking at it as there's orders rate, and all the time, 100% of the time, there's always orders. There's always people stops and everything. So I was looking to take sells from these, this area and this area too, if price wanted to come up here to really grab, some more, some more orders before pushing down to overall take this out. And, all the time. And, this is where I'm going to talk about real quick, your pips and your targets and everything. You can target structure, but, target structure, target, 10, 20 pips. But, if you see understanding, smart money side of things, and you see, areas like this, and, in the other pairs, imbalances, there's an imbalance right here, a small imbalance, and you start to see that, you can start to use those areas as your targets. And, they can be longer term trades. Now, this is all going to be depending on how you trade. If you really want to hold, all the up and down, especially on a higher time frame, I don't think you do. But, initially, that can be another confirmation or confluence to your sell or to your buy, right? So this confluence to my sell of wanting to target liquidity, because I know that, price is going to want to come to mitigate these lows. And, on the buy side, maybe down here, you're buying because you knew, there's liquidity, and you're looking for structural pushes, or, or maybe there was a supply zone, that was left unmitigated. So, regardless of pips or whatever, you can always use, zones as POIs. And that's why I call them POIs, because they're points of interest, because they can either be a point of interest for you to get in the market, or you know, maybe stay out and watch, you know, see how price reacts in that area, or they can be used for targets, right? But that's on the daily. I think I had these zones marked up from the monthly, yeah. So I really wanted to see on a monthly time frame, because we did come on a monthly time frame. We, you know, we're very bearish, but we did, you know, we wicked these lows, mitigated that, and you know, on a lower time frame, we started to break structure. Price started to take out highs, you know, equal highs, taking out more highs. You know, really started to shift bullish. So on a monthly time frame, you know, these are the points of interest that I saw. Oops, excuse me. I have the 50% mitigate, you know, lined up. I don't really use the 50 anymore. I just use that overall, you know, range of being in here. It's always valid. You can always take trades off the open, right? Still, that's always valid to do, but you know, just back test, because you know, sometimes on these, in these zones, you know, you might be running a lot of risk depending on where you want to put your stop before you know, to be in a profit. So always test of where, you know, those entries work the best. But this is where I was looking on the higher time frames. Overall, looking for bullishness in these areas, but as I'm now bearish to get to those areas. On the 4 hour, you know, there's an imbalance right here. So maybe, you know, this is something that can look to be filled. I'll just take it from here. Small imbalance right there. Overall, I don't really see any zones in here, because I still want, oh, that's the, because I still want to see, you know, you have this trend line right here. I see it as liquidity. People sell stops, or people stop losses, and, you know, buy stops, buy limits, whatever, trying to, you know, catch the breakout, or, you know, protect their orders. And we still have this overall demand supply zone. I'm sorry, I use it's red now. Overall supply zones right above that have still yet to be mitigated. So that's really it. I don't really see any really other clean areas to get into. I need to see more. And it's definitely going to take a while for AU, because, you know, these are larger areas, right? But I think these are the most, you know, these areas make the most sense for me to be able to get in, right? Because this area, why would it be okay to get in here? You know, just formulating, understanding what the market is doing, you know, right? You have this last, you know, up to down move, and you know, just use it as that, if you will, or you can use this, the really last candle. But, you know, overall, this move, you know, was the last down move that has, you know, been unmitigated, right? And, you know, started to see structural shifts down. And what's right below it, there's liquidity. So it wouldn't be wrong for me to think, you know, possibly, you know, price would come up here to take this liquidity, right? If we were still wanting to sell, grabbing orders just to come in, you know, to another area of interest, right? To get in. So this is your, you know, your mitigation of that trend line. And then you have your shifts. And then, you know, within that zone, right, here's the zone right here. And then, you know, this is the new created supply zone. You know, after you see that there's maybe a confirmation, get in, boom, right? So that's not wrong for me to think in this situation, you know. And this is what you have to tell yourself. Understand, like, even if whatever strategy you have, understand what the market is doing, and you know, it's telling you a story at the end of the day, right? And that's why, you know, all these zones, I use all these zones. Why is it doing it? I don't just mark it up and be like, okay, I'm going to target this zone. There's a why to it. And I think, you know, that's what really helped me with my trading. And once you guys, you know, get deeper into the why, and not just look, you know, understand, and not just focus on the profits, because the profits are going to come at the end of the day if you have a consistent strategy. But understanding the why behind it will help you get into better trades, and also help you get it, you know, stay out of, you know, bad trades. Because, you know, for me, this supply zone, even though there's a supply zone right here, if you want to use this as a supply zone, I don't want to take this trade and have my stop above these highs, because there's a shit ton of liquidity right here, right? And I also see that there's a a zone right above it that's unmitigated. There's a zone right above it that's unmitigated. So, just understanding that, okay, I know that liquidity likes to be ran because there's orders right here. I'm going to stay the fuck out of this trade. I'm not going to get in because, there's possible entry just right above it. So just understand that, kind of, what is the market telling you type of thing. Same thing right here. This is, right? This is a demand zone. Boom. Essentially, it did get mitigated, right? But maybe you use this whole thing, right? If you're using this as your protected high or whatever, I'll just use this because this is that, that really bold candle. If I was still looking to be bearish in, maybe if you were looking to still be bullish in this area, but you understood, one, that there's lows right here, right? No matter what you saw in here, if you're looking to be bullish, or if you thought this was a support, to me, this is liquidity. Even though it was mitigated right here, it's still going to be ran because there's still relatively equal lows. Because look, there's lows right here, lows right here. These orders, just understanding what the market is telling you, what the market has done in the past, and what the market is doing now. The story. What is it doing? Why is price driving down so fast? Why is price being bullish from here? Why is price being bearish from here? Asking yourself that will help you tremendously. Because, in this area, why I was being bearish in the first place, why I had these zones marked up previously, was because I would take out these lows. And because I knew from a higher time frame perspective, we were starting to shift somewhat, but there was areas left behind, right? This area that took out structure, that needed to be mitigated. So I'm gonna leave you guys at that. I hope you guys enjoyed the fucking I don't even know how long I've been recording this, of me talking about golden stuff. I hope you took notes. Please. Because this is like, everything I showed you guys in this Zoom is the way I think and trade. I know that I showed a little bit of it in Sean's Zoom, but this is super in depth. And even from here on gold, in the long run, you were looking at gold. Boom, dude. You can be bullish for here for a little bit. And why do I want to confirm? Because once again, you could use this zone to look for, plays, and on a lower time frame, you can be profitable. But in a long run, I see liquidity. There's equal lows, equal lows, equal lows, and maybe on a higher time frame, there's ask yourself, maybe there's an area that might want to be mitigated too, because just as much as you see demand zones and stuff on lower time frames, you can see them on higher time. And you can also look at structure the same, because you can even look, just look at this liquidity. And we look at liquidity on lower time frames too, but on the weekly chart, it's still the same thing. It's still liquidity. And also, one more thing, the supply zone, right? On a weekly, if you really do top-down analysis, understand, okay, maybe why is gold selling? Well, maybe because on a higher time frame, it's tapping into a supply zone or a demand zone, right? Just maybe that's why it's coming in here. And then you're starting to see structural shifts, right? You see a break, these lows, and you come into, the move that caused it, which was right here. I caught a sell from here early when this happened. On the 6th, I was in here. I'm pretty sure I called this in the group. Quote me on it. You probably can't quote me on it. I'm pretty confident I said call this trade out in the group, this sell. But that's why we were looking at it, because I formulated a story of understanding how these zones work with one another. Evidently, even though we are selling from all the way up here, there's still a shit ton of liquidity that's I can target that. That's, that's a tool in me, a tool on my bag or to the trade that I can, back as confluence, use confluence, target the liquidity. So that's it. Formulate a story in your trades. I hope you guys, enjoyed the lesson earlier about the imbalances and how to use them. They're really helpful. And, back test imdentifying them and seeing how they work out for yourself, for your trading, your strategy, your plan, whatever you want to call it, imbalance right here gets mitigated, just see how they work, see and understand, start to ask yourself why. And yep, I appreciate you guys. Thank you.